Hi, this is Nicholas Vardy of the Offshore Club, and welcome to this week's edition of Buy or Buy. In this series of videos, I take a stock that has been in the news and I strip away all the hype and I let you know whether you should buy now, buy later, or buy never. Today, I want to take a look at Facebook, a company that has been making the news recently. On October 28th, Facebook announced that it would be changing its name to Meta, complete with a new ticker symbol, MVRS. This name change reflects the company's pivot to a completely new business model it calls the metaverse. Now, the metaverse uses technologies such as virtual reality and augmented reality to engage users in an online alternative universe with games, avatars, meetings, and other virtual events. Facebook has heavily invested in virtual reality and augmented reality in the past, including buying companies like Oculus. Now, this year, Facebook actually created a product team to work exclusively on the metaverse. This month, it said it's going to be hiring 10,000 workers over here in Europe over the next 5 years who are going to be working exclusively on this new business model. Now, in examining Facebook, let's start where we always do, which is with the numbers. Now, on October 25th, Facebook reported its financial results. Facebook reported revenue of $29 billion. Now, that represented a solid growth of 35% year on year, but revenues were flat quarter over quarter. Overall, the numbers came in below expectations, and Chief Operating Officer Sheryl Sandberg attributed this to Apple's change in its accessibility with respect to advertising for Facebook users. Nor was the news particularly good on users. For the third quarter, Facebook reported monthly active users of 2.91 million, up 6% from a year ago. But this also came below analyst expectations. As a result, analysts are steadily decreasing their estimates for Facebook's revenues over the coming years. In fact, on average, analysts now expect Facebook to generate an average of 13% earnings growth over the coming 3 years. Now, that's not bad, but it's not great, and it does make it hard to justify Facebook's current PE ratio of approximately 24. But there are other critical reasons why Facebook has its challenges ahead. And these reasons have to do with its long-term relative position in the online marketplace. Here are 3 specific challenges Facebook faces. First, Facebook has been hit by investigations by regulators as well as stagnating growth in developed markets. The Federal Trade Commission has filed an antitrust lawsuit against Facebook alleging anti-competitive practices. And in whistleblower documents that were revealed first in the Wall Street Journal, internal research has come to light about Instagram's effects on the mental health of teens, as well as whether Facebook platforms actually stoke divisions among its users. In short, Facebook has lost its feel-good factor. The second challenge, even optimists expect that massive investments in the burgeoning technology of the metaverse will take more than a decade to fully pay off. As Mark Zuckerberg told analysts, this is not an investment that is going to be profitable for us anytime in the near future. But basically, we believe that the metaverse is going to be the successor to the mobile internet. Those are very big words. Vishal Shah told CNBC, the metaverse for us is a 5, 10, 15-year journey. Now, that's a long wait for both the company and for investors. Third, most investors today forget that there was a version of the metaverse that existed and failed at least once before. Remember Second Life. Some of what's been said about the metaverse in the past year could be taken straight from the late 2000s. Now, this included socializing in games, working in virtual offices, speculating in virtual real estate, using digital currencies, and buying digital-only art. Boy, does that sound familiar. But Second Life turned out to be a fad, and it eventually fizzled out. Will Facebook's metaverse turn out any better? Well, time will tell. As I always say, I can't predict the future, but I can say with confidence that Facebook's growth is slowing. And there's a danger that Facebook will go from a growth stock to a cash-generating machine that is rated far lower by the market. In other words, 5 years from now, investors may be viewing Facebook as little more than an online utility company. And that profile hardly justifies a $1 trillion market cap. My verdict? Facebook is stuck between a buy and a buy. Facebook isn't going to go the way of AOL, but if you own Facebook, you can hold on to it, but I wouldn't expect much in the coming years. If you don't own Facebook currently, I really wouldn't go out and buy it. I think there are far better growth stories out there. I hope you enjoyed this edition of Buy or Buy. If so, please hit the like button below. And I want to remind you, if you want to follow my buys or sells, then make sure you size your position accordingly, set a trailing stop, and never bet more than what you can lose. And if you would like more insights on stocks, trends, or money in general, be sure to sign up for Liberty Through Wealth, a free e-letter I write for at the link below. Thanks for watching, and I'll see you next time on Buy or Buy.